too. And what emerged was a heavily regulated, state-regulated form of capitalism that had many other important features. And that produced relatively rapid capital accumulation for a few decades, and by the late 60s, its contradictions became more severe, and that gave rise to a second crisis in the 1970s, widely viewed as a period of crisis of U.S. and global capitalism. In both cases, the crisis, the systemic crisis, gave rise to major restructuring. In those cases, restructuring of capitalism. So today it appears we're again entering such a period. What I will do in my comments, and I hope to keep them short enough so there will be plenty of time for questions, comments, discussion, is to first give an analysis of how the neoliberal form of capitalism was able to promote high profits and long economic expansions for some 30 years. And I'm going to focus on the U.S. The U.S. did have quite long economic expansions in this period, the one in the 1980s, one in the 1990s, and one in the 2000s. In fact, by the early 2000s, the mainstream economists were referring to the current system as the Great Moderation. They turned out to be a mistake. They thought capitalism had finally become extremely stable. They were arguing this right up to the last minute before the financial system collapsed. Then I will give an argument that the very features of neoliberal capitalism that brought these relatively long expansions and made it seem like capitalism had been relatively stable were at the same time creating long-run trends that were unsustainable and were bound to produce a very severe economic crisis. And if there's time, I'll make some comments about what I think are possible future directions of restructuring. And as I mentioned, I am going to focus on the U.S. economy, where this crisis originated, and it's what I know the most about. Now, some people on the left are not happy with the term neoliberalism. It's a funny term. It's difficult to use in the U.S. You know, in U.S. politics, a liberal is someone who favors an active government role in the economy. Everywhere else in the world, it means the opposites. You know, liberal parties in Europe, in Latin America, in Asia are parties that favor laissez-faire, a hands-off government policy. So the term neoliberalism arose, I think, in Latin America first in the 1990s to refer to the form of capitalism that emerged after 1980. And it has a whole set of features. It involved deregulation of business and finance, both domestically and internationally. It involved privatization in other countries, privatization of state enterprises. In the U.S., it meant privatization of state services, contracting them out. The government renounced Keynesian-inspired regulation of the macroeconomy that previously had, at least to some extent, been aimed at trying to keep the unemployment rate from getting too high. This was given up and replaced by other macro policies focused on preventing inflation. There were sharp reductions in state social spending. Big business and the state attacked the trade unions, which transformed the labor market so that capital has been able to quite fully dominate labor, which was a change from the previous period. There was a shift in the labor process from mainly reliance on long-term employees to increasing reliance on part-time and temporary workers. And then there was, as David Harvey rightly emphasized, the emergence of unrestrained competition. In the preceding post-World War II decades, competition tended to be co-respective and relatively regulated among, at least among big capital, if not in the entire economy. Now, all of these features of what I'm calling neoliberal capitalism all of these institutions gave rise to three important developments. First, growing inequality. That is, a growing gap between wages and profits and their rates of change over time, and also growing inequality among households between the rich and the rest. Secondly, it gave rise to a financial sector increasingly devoted to speculative, high-risk activities. And by the way, I'll just throw in as a footnote that it happens that in 1984, I testified before the House Banking Committee against financial deregulation. Congressmen were worried that financial deregulation then in its early stages would not be such a great idea, and they tried to get economists to testify. And all they could, at that time, the mainstream of the economics profession thought, deregulated financial institutions would be the greatest thing since sliced bread. And the only economist they could get to testify was a Marxist. I got to testify against it. You could find it if you dig through the tomes that no one reads of congressional testimony. And third, these features of neoliberal capitalism gave rise to a series of large asset bubbles. These three features, these three developments are not features of capitalism in general. None of them characterize the form of capitalism from the late 40s through the early 70s. I mean, it was still capitalism after World War II with exploitation and business cycles and all the other features that we know, but it didn't actually produce an increasing gap between wages and profits. It had a heavily regulated financial sector, and the financial sector basically credit for industry and households in relatively straightforward ways. And there were no significant asset bubbles during the earlier period of regulated capitalism. I'm not trying to sing its praises, but just to indicate that it worked differently from neoliberal capitalism. These three developments both explain the long economic expansions that neoliberal capitalism brought, and also explain why a set of trends developed over the long run that was unsustainable, an unsustainable set of trends. Now, I don't really have to give a lot of evidence to this group about the rising inequality, et cetera, but just I'll just show you two graphs. This shows growth rates in the output per hour, which is labor productivity, and in the real average hourly earnings of non-supervisory workers, which is most of the labor force. And what you see is that, and you should do this from business cycle peak to business cycle peak, so as not to get distortions from the ups and downs of the business cycle. You can see that in every one of these three periods, 1979 to 90, 1990 to 2000, and 2000 to 07, there was a big gap between the growth rate in output per hour per year and what happened to average hourly earnings. The gap got particularly large in the last business cycle. Over the whole period, the average real wage actually fell slightly per year, while labor productivity rose. In the period 1948 to 73, real wages and labor productivity rose at almost the same rates. It was quite different. Here's another measure. This is growth rates of profit and growth rates of compensation, both corrected for inflation. And here compensation is a very broad measure. It includes fringe benefits, cost of health care, and it includes not just production workers, but all employees, including managers. Still, what you see is a gap. The blue bar is the annual rate of growth of profits. The red bar is annual rate of growth of compensation. It's a gap that grows enormous in 2000 to 2007 when the neoliberal model reached full maturity. Profits grew at 8.2% per year, while real compensation grew at 1% per year, so 8 times.
Talking about wage compensation or what?
Compensation is wages, salaries, and fringe benefits of all wage and salary employees in the economy. So it includes production workers and also managers. So it actually exaggerates the rate of growth of workers' wages. It overstates it. But even so, look at the huge gap between profit growth and this measure of wage growth. Yeah?
I was total, or is it annual average?
That's annual compounded average. So profits were growing 8.2% per year. It's true, the caption is not on it, as it was in the original, which said annual. Well, actually, if you turn your head sideways, and you can read the small print, it says annual average percentage rate of change. Probably can't see it from the back row. I'm not going to give you evidence that the financial sector turns its attention to speculative high-risk activities, because we all know the gory details of that. Financial institutions created trillions of dollars of highly risky securities and other instruments. The evidence of large asset bubbles. In the 1980s, there was a big bubble in the US in southwestern commercial real estate, which gave rise to the savings and loan crisis. In the 1990s, after 1995, there was a huge bubble on the stock markets in the US, and people often call it the dot-com bubble or the technology bubble, but it was not just that. It was a bubble that affected the entire stock markets, which grew at an extremely rapid rate for 5 years, and then starting in around 2002, an even bigger bubble in the housing markets. The housing bubble was so huge that by one estimate, by a guy named Dean Baker, who's very good at doing these kinds of estimates, by 2007, out of the total US housing wealth at that time of $20 trillion, an estimated $8 trillion of it was pure inflated value due to the housing bubble. So about 40% of housing wealth consisted of bubble-created false value that was going to disappear and has been disappearing since 2007. Now, why does neoliberal capitalism give rise to the above three developments? My paper gives explanations. I will not take the time to go into it, but just kind of make the summary claims that the growing inequality was a result of all of the institutions of neoliberal capitalism. David Harvey characterized the recent decades of capitalism as a system in which capital really asserted its full power. And if you analyze each of the institutions of neoliberal capitalism, they were presented as good for efficiency or good for this or good for that by its advocates, but they were all directed at reducing workers' bargaining power and increasing capital's power. And the power of capital relative to labor increased so much over this period that it explains both the growing inequality, gap between profits and wages, and also the growing inequality among households. The speculative high-risk financial sector was the product not just of financial deregulation, but also the heightened competition in this system. Because even those financial institutions that may have been, the old ones, the well-established ones, the ones whose managers had maybe they knew a little bit of history, that were a little nervous about what was going on. The competition was so intense among financial institutions that they could not stay out of the speculative lending, because if they didn't, their rivals would be making these huge profits and they would be called on the carpet. So everyone had to join, even the ones who knew it was heading for disaster. And this is linked with the third element, asset bubbles. The financial sector profited enormously for this. The old mundane activities of lending money to households for a mortgage with 20% down and holding the mortgage for 25 years until it's paid off, lending money to industrial companies and waiting for them to pay it off each year. It's not enormously profitable, not compared to speculative activity. The total profits of the financial sector in the US during this period went from 21.1% of total corporate profits in 1979, just before the neoliberal era began, to 41.2% in 2002. It fell slightly after that. It doubled. The share of the financial sector in corporate profits doubled over this period, so it was very rewarded. Now, why these asset bubbles? An asset bubble occurs when, what an asset bubble means is that the price of some asset is going up because it's going up, because it has been going up. Essentially, if people see investors, those with money to invest, as opposed to people, I guess, see the price of some asset like corporate securities or real estate going up, and if they believe it will continue to go up, then it makes sense to buy it so that they can then resell it and make a capital gain. And if people do that, the increased demand causes the price to go up. More people notice this, and they also want to get in on it, and their purchases cause the price to rise further. So that is what an asset bubble is. It's a self-sustaining, spiraling upward increase in the price of an asset, resulting from the belief that its price will continue to increase. And those who get in on it can make a lot of money while it's going up. The whole set of neoliberal institutions tends to produce asset bubbles. Essentially, the inequality, the huge amount of surplus sloshing around this system relative to the productive investment outlets meant that a lot of investable surplus was looking for somewhere to go. It tended to find its way into one asset or another. That would get an asset bubble started, but an asset bubble can't really keep going unless there's a financial sector that is prepared to lend to support it. And the deregulated seeking financial sector is able to do just that. Those two together produce this series of asset bubbles. Now, how do they bring about expansion? Well, the enormous power of capital relative to labor meant that wages were stagnating, profits were going up. Capitalists tend to want to invest and accumulate when they're making high profits, and they did. But then there's a problem. And I was actually very puzzled by this at the beginning of the neoliberal era. I couldn't figure out how this system was going to work because I could see it was going to produce high profits, but they have to sell the goods to someone. And if wages were going to be stagnating or falling, who were they going to sell the goods to? So initially, and I've been at this for some decades, initially I thought, gee, this system can't produce very long expansions at all. They're going to run into a problem of lack of demand very quickly. And as I studied first the 80s and then the 90s, what I discovered was that this system was able to produce long expansions only, they could produce long expansions only if some group borrowed so they could spend more than their income, because the incomes of most households were stagnating. So it could produce long expansions only if someone was borrowing a lot. And asset bubbles provided the collateral that enabled one or another group in the population to spend more than their ordinary income. So in the 90s, late 90s, the stock market bubble led many upper middle and upper income households who invested in the stock market believed they were getting rich, and they began spending a lot on consumer goods. And if you look at the data, you see that the ratio of consumption to income went up in the last few years of the 90s, and consumption grew faster than GDP, and that's what enabled the expansion of the 90s to be strong. That expansion ended only when the stock market bubble collapsed, as all bubbles eventually might. It doesn't matter what is the event that sets it off. Eventually, every bubble collapses. In 2000, the housing bubble collapsed. The stock market bubble collapsed. And the economy was actually heading into a fairly sharp recession, but then the housing bubble started. At that point, the gap between wages and profits had gotten so huge that a really big bubble was necessary in order for there to be someone to show up to buy the goods. Workers' wages were actually falling in the 2000s for production workers, and the housing bubble enabled not just the upper end of the income distribution, but a very broad swath of the population to borrow against the value of their homes. So this is a measure. Ironically, I got this graph from a paper that was co-authored by Alan Greenspan. And this shows what's called gross equity extracted from homes, which means that's when people take out a second mortgage on their home and they get some money and they can spend it. Gross equity extracted as a percentage of disposable personal income. Disposable personal income is the income that households get from their various sources of income, then you subtract the taxes that they pay. So it's what households dispose of, what they can spend. So in the 90s, it was around, the amount of money that people were taking out of their homes was around 2% of their ordinary disposable income. But then it began to rise, and in 2004 to 2006, the height of the housing bubble, people were taking out an amount of money each year from second mortgages and related measures that expanded their spending power by 9 to 10%. That's a really big increase. So this played an important role. This was possible because of the run-up in home values that made banks willing to grant these second mortgages. The speculative financial sector was crucial to this because an asset bubble can stimulate consumption only if people can borrow against the rising value of their paper wealth. Because if the only way people could spend their stock market wealth in the late 90s was to sell the stocks, it would have ended the bubble. They had to be able to borrow against them. So, and the same with the housing bubble. And the loans, these crazy loans, the subprime mortgage loans, the Alt-A mortgage loans, why? At first people thought, well, the big financial institutions were not holding on to them, but actually they were holding on to a lot of them, it turned out, enough to sink them, to make them insolvent. Why were they doing this? Well, in every major bubble, the idea spreads that it will never end. And you heard again and again during the housing bubble that housing prices never fall, they only rise. And it was remarkable because anyone who'd actually bothered to look, and in the age of Google searches, it's easy. You just do a little research, you find, no, that's not true. Housing prices often go up, but sometimes they go down, even for some number of years. But this it was widely believed that housing prices would, they'd never fall. And so that meant someone who held, one of these creditors of the people with, no job and no savings who got these mortgages, they didn't think it was actually risky to lend money to people like that, because if the people defaulted, they'd own the home, which, as everyone knew, would just keep increasing in value. And so it seemed like a safe thing to do. This was a big factor in the process. Now, inequality played a big role because in the 2000s, millions of working class families found their real income falling. Their income was not keeping up with necessary expenses for food, clothing, housing, healthcare, education. And the only way they could prevent a decline in their living standard was to get money somewhere else. And that's when someone knocked on the door. Someone probably dressed about like this, only with a tie, would show up on their door and say, you have all this wealth that you're not using. I do? Where? It's in your house. I'm willing to lend you $50,000. And if you're worrying about how you're going to pay that hospital bill or your kid's tuition bill, why worry about it? Just take out this loan. And you look at the document and it says, well, it looks like it only has a 3% interest rate, but after 2 years, it's going to go up to 12%. That doesn't sound very good. And the person said, oh, that's irrelevant. Before 2 years, you can refinance your mortgage again at a low interest rate. And so millions of people were suckered into taking out mortgages because they were desperate. They had to pay bills. They didn't want the electricity shut off. They didn't want their kid kicked out of college, whatever. So inequality played a big role in this. Now, how did this lead to a crisis? Over the whole period of neoliberal capitalism from 1979 or 80, this gave rise to unsustainable trends. Household debt, which is the total amount that households owe. It's primarily mortgage debt. It's also credit card debt. Those are the two main parts of it. Have been relatively stable relative to whatever you might compare it to in the decades before 1980. And one thing you can compare household debt to is the disposable income of households. And in 1980, in the early 80s, it was just above 60%, which meant that households' total debt on the average was about 60% of their after-tax income. So, if they were, so if someone had let's say, a $50,000 a year income, and their household debt was 60%, they would have $30,000 in household debt. If they were paying 5%, that's $1,500 a year in interest payments. Well, maybe they could afford it out of a $50,000 salary. But it started to rise because that's the way neoliberal capitalism worked. It rose in the 80s, then it leveled off in the recession of the early 90s. Then it rose in the expansion of the 90s, and in the recession of '01, it actually increased faster as the housing bubble began to emerge. And by 2007, it had reached over 128%. It had doubled. So it was an unsustainable trajectory. A form of capitalism that can provide expansion only by more and more borrowing by working people because their pay doesn't go up. It's a game that can go on for a while, but it can't go on indefinitely. What wasn't known until recently was that it was not actually the housing sector that was borrowing the most in the US economy. There was another sector of the economy that was borrowing even more. And recently a number of people discovered the data on this and were really shocked to find out how much borrowing was going on. The three big sectors, three big parts of the private sector are households, the non-financial corporate business sector. Those are the companies that make real things that you can drive or sit on or live in or whatever. And then there's the financial sector, the sector that you have to scratch your head as to exactly what they're producing. Well, if you look at the data, what you find, and this goes from 1948, first the non-financial corporate sector debt, and this is as a percentage of GDP. So that's the purple line. It doesn't grow very much, and in the neoliberal era, it has more ups and downs, but it doesn't grow a lot. There's not a significant increase in the borrowing, in the debt of the non-financial corporate business sector. The household sector in yellow, once it recovered from the repressed World War II level, it stabilized, and then it began its relentless climb that I showed you on the previous graph. It about doubled as a share of GDP. But the third line, I'm not sure what color it is because I'm not that good on colors. It's this one. It starts down here.
Dark blue.
Dark blue, thank you. It starts at near zero. This is financial sector debt, and it grows a bit. But in the neoliberal era, it increases almost sixfold relative to GDP. The financial institutions were making such high profits that they realized they wanted more leverage. If you're making high profits, if you could borrow most of what you invest so that your own money represents only a small fraction of it, you boost your profit rate greatly. So they applied political pressure. The investment banks in particular got permission to increase their leverage, the amount of borrowing they did, by a big multiple. And the financial sector had become enormously fragile, is the term that economists use for this. So this was a system set up for a collapse. What caused it to collapse was the housing bubble reached its inevitable end, and once the housing prices began to fall, all of these unsustainable trends were suddenly apparent. Suddenly all these securities began to default. Mortgages, people began to default on their mortgages. Everyone who held these securities wanted to sell them, and they just plummeted. And the financial crisis occurred. Now, it is common to view the recession in the real sector as simply a result of the financial crisis. And the financial crisis has made the recession worse, but I don't think it's the ultimate cause. I think the financial crisis and the recession in the real sector resulted from the same immediate event, and that was the deflation of the housing bubble. The recession in the real sector actually started a little bit earlier than the financial crisis. It began to go down in the summer of 2008. The real GDP began to decline. The huge decrease in housing prices meant that household consumption was bound to decrease, and that in turn leads to a decrease in investments. So in terms of Marxist crisis theory, this is a crisis of overinvestments. That during these long bubbles, not only did the bubbles stimulate capitalist enthusiasm about what their future profits would be and cause them to invest a lot for that reason, but since consumer demand was elevated by borrowing against these asset bubbles, that also led to the creation of a lot of productive capacity. And once the last asset bubble, I don't know if it's the last crisis, but I'm confident it's the last asset bubble of this period. Once that one collapsed, the productive sector is left with this huge overhang of productive capacity. And we've seen a very rapid drop in utilization of productive capacity. This is a crisis of overinvestments, which, by the way, I think is quite similar to the Great Depression of the 1930s in that respect. I have a figure, but I'm going to skip it. What we've seen so far is declining GDP, declining consumer spending, extremely rapid decline in business fixed investment, which in one quarter fell at almost a 40% annual rate. We haven't seen, the US economy has not seen such rapid decrease in business investments since the Great Depression. The only things that have been increasing have been net exports because our imports have been falling slower than our exports. So the balance has, no, our imports have been falling faster than our exports. So the balance has improved. Double negative there, got me. And government spending. And the primary part of government spending that has been increasing so far has actually been military spending. It's over the last year it increased at 7.5%. The housing bubble is likely to take some time to deflate, so this process is likely to go on for some time. So this, this is my argument that I don't think neoliberal capitalism can be revived. All the major financial institutions are surviving based on one or another form of government handout. Even the ones like Goldman Sachs that have paid back the bailout money, they're still able to use basically free borrowed money from the Federal Reserve to engage in their risky activities to which they have returned. The financial sector is contracting rapidly. It's hard to imagine another asset bubble of any size developing soon. This version of capitalism doesn't seem able to provide any prolonged expansions, again, at this time. So it's hard to imagine it providing intact. Well, I'll just mention very briefly, history suggests that when a particular form of capitalism runs into a structural crisis, that something new takes its place. And I don't think it's possible to say at this time what that something new will be. But I will suggest 3 possible directions of change. A corporatist form of capitalism, a social democratic form of capitalism, or socialism. At this time, the main influential groups that are maneuvering to restructure the economy are the big banks and industrial companies. Popular groups are very weak after 30 years of neoliberalism, which has as one of its virtues from the point of view of capital, tends to greatly weaken popular and left-wing groups. And one could imagine a form of capitalism developing in which labor market institutions remained as they were in the neoliberal era, with capital dominant, with wages relatively stagnant, a financial sector that was again significantly regulated so as to provide credit for industry rather than just to speculate. And that still leaves a demand problem. Who are they going to sell the goods to? That's where the government comes in. A long-term program of increasing government spending. And there's a more sort of leftish version of this, which would emphasize infrastructure and new technologies, and a more right-wing version of this. And you see some right-wing commentators have been writing op-eds saying, well, the conservatives were wrong about needing a small government. We need a big government. But what we need to do is rebuild the military. That the American military infrastructure is in worse. Well, I didn't really need it. I accidentally turned it off.
Just go back.
I don't think that'll work.
Yeah.
It worked. Hope my other predictions are better than this one. So it's possible we get a more military imperialist version of this, or we might have possibly a somewhat more domestic infrastructure version of this. It would not be very good for working people. Wages would still stagnate. Workers would have very little bargaining power. Another possibility, which has occurred before in history, is a social democratic form of capitalism, which is one essentially based on some kind of compromise between capital and labor. Such a system would have to involve a strengthened trade union movement so that wages would again grow in step with productivity, a change in the form of competition to make it more regulated, because it's basically impossible to have a strong trade union movement in the face of cutthroat competition among capitalists, because the pressure to drive wages down is enormous in that form of competition. But historically, a social democratic form of capitalism has arisen only when there was a militant and radical working class movement that was threatening worse from the capitalist point of view. And that's what happened after World War II, when socialist and communist movements were very strong. And in the US, in Europe, in most of the capitalist world, the capitalists decided, well, better, as Joseph Kennedy said it best. He was a big capitalist, the father of John F. Kennedy and Edward Kennedy. He was a big capitalist in the 1930s who supported the New Deal. And he once said, I would gladly part with half of my fortune if that's what's necessary to keep the other half. Now, he was speaking, it was kind of an exaggeration. It's not known that he ever gave up half of his fortune, but he was willing, thought maybe some taxes had to be paid and some wage increases granted. But capitalists never seem to do this out of their own far-sighted self-interest. They do it when they're up against the wall, and it seems like it's better than the alternative. Otherwise, they can't seem to restrain themselves from trying to grab everything in sight. But it is possible that if this crisis, as in my view it is a systemic crisis that requires some kind of major restructuring, that means it's going to go on for some time. And conditions are not going to be good for working people for some time, then there may arise a radical and militant working class movement, which would open up the possibility of a social democratic compromise. But it would also open up that other possibility that leads the capitalists to think about compromise. The world's people have seen 30 years of neoliberal capitalism, which has made all popular groups worse off over time. This crisis is showing capitalism at its worst. You read these funny comments in the major media when the financial crisis was first breaking, journalists saying, it almost seems as if the capitalists are trying to prove Marx was right about capitalism. Well, it did seem that way. People are seeing the profit motive's total failure to meet people's basic needs for a decent living standard, for secure employment, meaningful work, for an economy that's environmentally sustainable. And people are being pushed into struggle to keep their homes, to get jobs, to survive, while they see the richest capitalists continuing to enrich themselves. Millions of people may find the argument for socialism makes a lot of sense. Socialism has a big advantage over social democracy. A social democratic compromise can function only if there's fairly rapid increase in the production of commodities so that profits and wages can rise together. And it's not clear that the Earth's environment can sustain another 30 years of rapid increase in the production of commodities. An advantage of a socialist planned economy is it can produce growth if growth is needed, but it does not have to produce increasing quantity of output. And in the developed parts of the world, I don't think more commodities are needed. There needs to be a redistribution of what effort goes into producing, but a comfortable living standard for all would be quite possible without increasing production of goods and services. And in the less developed parts of the world, where economically speaking, where there are more goods and services needed, The richer countries could direct their technological ability along with the growing number of very able scientists and engineers being produced from the third world. That's who mostly goes to US graduate programs, as I well know from my job. They could direct their attention to finding environmentally sustainable ways to increase production in what we used to call the third world to reach a level of comfort for everyone. In Latin America, we've already seen new attempts to build socialism, and the socialist movement may be reborn in the years ahead throughout the world, finally opening up the possibility of placing capitalism where it belongs at this point, which is in the museums. Thank you. Okay, questions, comments? Yeah?
When you say that Goldman Sachs is going back to speculative, making profits on speculation, off free government money, it puzzles me, because supposedly the way the whole crisis occurred when they speculated by securitizing all sorts of debts and selling them, and then when they couldn't sell them, the crisis occurred. So how are they making? What are they speculating? And that's
well, put yourself in their place. It doesn't look like it was a mistake from their point of view, because they made fortunes, huge. You know, the traders, the top executives, they got 10, 20, 30, 40 million dollars a year. Then it all collapsed and the government bailed them out. And they're still getting the big bonus.
What are they able to speculate now?
Do you have life insurance?
Securitizing debt and some of it?
Do you have life insurance?
No.
Well, you're lucky. They have now turned to securitization of a certain kind of life insurance policy, which has a face value. And if you have one of these, you can, if you are hard pressed for cash, you can turn it in, but you don't get much money. So some of these speculators, they're buying up these life insurance policies at a somewhat higher rate, which means a contract that says when the person dies, it gets paid to the one who buys it. Then they package them together into securities, asset-backed securities, and they sell them to the ultimate investors who get revenue, when people die. So you can see a natural link with the mafia here. Once this becomes a really big thing, if they can get the policies to pay off, say, a few years earlier than they might otherwise have, it would be very profitable. I can just imagine my mainstream colleagues saying, well, if it happens through the market, it must be efficient, hiring these services. So they're at it again. Now the life insurance companies are pissed off because they're going to have to make bigger payoffs.
Who's their market is my question.
Their market is each other and whoever is looking for a high rate of return security, because it's hard to make a very high rate of return on money these days. So these things are paying very high rates of return, and once they get this mafia link, it'll be even higher. Yeah.
Thank you very much. Very, very good presentation. Could you elaborate a little bit about the part about current neoliberalism not being something that can continue? It can't continue as a growth rate, but it doesn't mean that it can't continue at all. It can't be successful in a social sense, but they may not be interested in whether it's successful in a social sense. Couldn't it continue as a low-growth system, high profit for some people, not as high as things that we might envisage, but different people would be benefiting from that better system, and the road to that better system may be blocked, even a road to a better corporate system?
Well, history continues to surprise us. It has a stubborn tendency to fail to follow the path that Marxists have laid out for it in many cases. But I was not arguing that neoliberalism produced rapid growth. Actually, the growth was not very rapid. If you look at the growth from 1979 to 2007, it was substantially slower than it was in a system of regulated capitalism after World War II. And the rate of productivity growth was substantially slower. But I do think that for capitalism to survive, it has to have, over the long run, I think it has to have an institutional form that makes at least some modest rate of expansion possible. That if it really stagnates, it generates conflicts that will tear the system apart. So I don't believe that the neoliberal set of institutions can provide at this point anything better than stagnation, because it can't generate the same kind of financial sector and asset bubbles that it had before. And if that's what it does, I think it's going to create more and more social pressure. I'm hoping that it doesn't produce a new restructured form of capitalism, but instead produces socialism, which was one of the three put there.
If you don't mind, just to follow, then couldn't option number 4 be stagnation, then conflict, then war?
Well, that's possible, but that's still not a resolution. So eventually something, I don't think we'll have stagnation and chaos forever into the future. I think eventually some new order will arise. And the question is, what will it be? I do think it'll take a while. A new form of capitalism didn't emerge after the Great Depression, which began in 1929, until after World War II, 15 years later. It takes time to recover from the sort of crisis that emerges from a liberal form of capitalism. So I think it's going to take some time. Yes. I called on her. It's an ERPI policy. I'm sorry, please wait your turn.
It's your prerogative.
Helen, yes?
Hi. Under multinational, U.S. multinational, creating demand from the emerging, developing market, so by pulling up the living standard of the, developed like Africa and Asia. Isn't that how they kind of fill the gap in their profit?
I'm sorry, are you talking about what has been happening, or?
That's what has been happening, like using the, exploiting the globalization by creating demands from the developing country. So isn't that like
I wouldn't say so for Africa. I mean, the way that I didn't talk about the global dimension of the neoliberal capitalist order, and one part of it was that there was rapid growth in some parts of Africa, Asia, and Latin America, but it didn't include Africa. It was mostly in Asia, and some countries were able to develop fairly rapidly, produce an increased living standard for at least a section of the population, and part of it was selling to Europe and the US. So that was part of what occurred, and at the same time, it put workers all over the world in competition with each other, and was a big factor in keeping wages low. And even in the places that have grown rapidly, such as China, which is when I studied some, the improvement in living standards for the majority in China really happened just in the first 5 or 6 years of the reform and opening, as they call it. And since then, it's unclear whether a majority of the population has any longer benefited. There's a minority, it's a large number of people, whose living standards have gone up in the major cities in China, but the peasants and a large part of the non-regular urban population, there are studies that suggest their living standards have stagnated. So this system doesn't seem to have been good for any part of the world, if you're asking about the population as a whole. Yeah.
Well, just kind of a continuation of this same point. So you did say at the outset that your focus is on the U.S. economy, but in particular, as we consider, how they might try to get out of the crisis, there's been a great deal of speculation and talk in the financial press about the recovery that's allegedly underway currently as being an Asian-led recovery, and there's also been, a tremendous amount of anxiety about the currency exchange valuation problem, the connection between the Chinese yuan, especially, and the dollar, and even though this is, a somewhat esoteric point, but it appears that it has the capability of kind of blowing up the whole thing. Again, could you just comment a little bit about this connection between the Chinese economy, which after all did, they came up with a stimulus package that was in some respects remarkably similar to the U.S. stimulus package, and the U.S. economy, and that are now sort of linked together in this trade deficit on the U.S. side and trade surplus on the Chinese side with an allegedly undervalued currency. How is this going to play out, for the destiny of the neoliberal model?
Okay, well, economists can only predict the past. They part-time. Keynesian economics basically died away everywhere in the world except in China, where it has been alive and well since the late 70s. And when the crisis hit, China had evolved into having a completely export-dependent economy. So really, China wasn't driving the growth in the 2000s. Although, if you asked what made the global growth rate look not so bad, it was factoring in China. But the pull was really coming from this huge U.S. trade deficit, which created a very big market for Chinese exports. By 2006, 2007, exports were almost 40% of China's GDP, which is remarkable for such a large country. Its economy had become completely directed primarily toward exports and secondly to investment, domestic investment. And when the crisis hit, their exports plunged. They fell very rapidly, and the Chinese, through this system, they what was it, $565 billion stimulus plan, which is much larger relative to their economy than the U.S. two-year, $800 billion, $788 billion stimulus plan. It took them about 2 weeks to put it into operation, and they pumped their growth rate back up to about 8 or 9%. But they don't fit into the global economy in such a way that it seems like they could really lead it out of the recession, because they don't. They import industrial goods. It'll help Australia's economy and the various places that supply raw materials to China. But it's hard to see how it would have very much effect on Europe and or the U.S. Or Latin America. I don't know. I guess they're buying some stuff from Latin America now, and they're buying some minerals from Africa. Many believe the Chinese currency, the RMB, has been overvalued, and that this explains their, undervalued. They have a directional problem today. Undervalued, and that explains their great export success. And there is pressure on them to let the value of their currency rise, which would make them less successful at exports, but they're strongly resisting it, and they might let it drift up a little bit. But big changes in currency exchange rates are quite disruptive to not just the country that does it, but to the whole global system. So my guess is that they will probably let it rise a little bit. But in addition to the investment spending they're doing, they're building subways everywhere right now. They are also, they've increased the incentives to export, which is crazy. Into this declining global crisis, they're trying to export more. I doubt that will be successful, but that is also part of their program. And I think they're probably going to have to let the value of their currency go up a bit, probably not huge amounts. Still want to ask a question? Yeah.
I also wanted to ask a question about China and the effect on world development in the 21st century. You know that they have a planned economy, and they have planned already and cut back to 15% of their GNP is going to be for export. They were a little over 30. They weren't close to 40.
They were close to 40. I can show you.
Yeah, and at any rate, they have made a decision. They cut back. The whole planning commission has been working on that question. Also, by the end of 2010, they expect to be out of the economic crisis affecting labor. So that's quite different than what we're experiencing here in this world crisis, because our unemployment is going to go on a long time before capital gets invested in building new high-tech industry, and they are already planning that. Will that have an effect on us here if we open up our minds and try to discuss it without going into the old business about the Chinese communists, because they seem to be quite different today since 2005 than they were up to that time. So I'd like to get your take on whether they will have an effect on the way capitalism develops.
Well, I have a different take. In my, the Chinese leadership, since Hu Jintao became president, they knew that the economy was too dependent on exports. And they have talked about the need to shift China's economy from dependence on exports to dependence on the domestic market. But that is easier said than done. And to do so, currently consumption is about 38% of GDP in China, whereas it should be about 50 to 60%. But to change that, they would have to redistribute income from the new rich to the masses of people. And in my view, the new rich are very politically influential in China. They are closely connected to members of the party, and many of them are in the party. So far, they have not been able to do this. It's just talk so far. And I think there are big obstacles to shifting the Chinese economy to a domestic-based version. It would require big changes in a whole set of institutions, and they have made some small moves in that direction, but they would have to do much more, I think, to really change their economy. And I do not believe that they have a planned economy anymore. They don't say they have a planned economy. They say that they have a socialist market economy. For a while, they said they had a planned commodity economy. They dropped that phrase and replaced it by socialist market economy. They have Keynesian type of economic planning of what I think, unfortunately, is a capitalist economy. But I'm hopeful that China may return to socialism in the near future.
May I jump in just quickly? The lunch time is starting at 2 p.m. is the speech by Charles Barron down in the Founders Hall. Okay, so it's up to you whether you want to continue this. Just remember that people may be already having lunch.
I'll take one more. Do you want one more question, or should we? Yes, in back.
This is not exactly a question. I just want to take off from your point of the fact that to get
No,
any...
I'll tell you what, why don't you come up and ask her? I think people are ready to go. So why don't we go somewhere over and please come up and make the comment.